It's really a tough call right here. I mean, I think when you look at what the stock's done year to date, I think that the drop, quite honestly, was completely justified. And really, when you're looking at what they're doing in terms of the purge, let's be honest. I mean, our thesis is Twitter cannot be a standalone company. It needs to be part of a larger whole. And when 100% of the value of your company is dependent on the integrity of the data, the quality of the consumer, they can't have, bullies, bandits, and robots dominating their platform. So this is something they had to do in the long term. And let's remember, about 7 months ago, Bob Iger came out and said they were in talks to actually acquire Twitter, but the reason they backed off was the quality of that user. I think that was something that resonated with Dorsey, and this is something that the company had to do to go forward.
Want to bring in Yusuf Squali to the conversation from SunTrust, covers the stock, has a hold rating and a $33 price target. So Yusuf, I don't suppose you're telling investors to step in and buy after today's big plunge.
No, not at all. And in fact, we just published a new note a few minutes ago where we're actually lowering our price target to $30 on the back of what we heard this morning. The good news, and I agree with Robert, I think the company absolutely needs to do this. They need to clean up their act. At the same time, though, they are going into an investment cycle that will last several quarters, maybe even longer. And this investment cycle is going to crater margins for the foreseeable future. And because of that, it's very, very hard to try to get behind a stock like this. That said, M&A is an opportunity, but honestly, if it hasn't happened, I'm not sure exactly if if anything is imminent right now.
Robert, who is a likely buyer of Twitter, and just how likely is that eventuality? If you're kind of bearish on the standalone company, but your clients own it, are you just holding out for a possible takeover?
Yeah, I mean, it is a very small position of ours. It's not a core holding. That being said, I did mention Disney, and I think, with the Sky deal possibly not going through, Comcast making a $35 billion bid, they could now revisit that they've settled Fox. You could look at companies like Google have had a problem with social media, maybe looking at Twitter. And that's, when you look at what Facebook did with WhatsApp, they paid $20 billion for WhatsApp. They had 430 million active users. I think the kind of recency bias when investors are trying to place a price tag on this, every time you see Twitter get over 25 billion without some type of new thesis of how they could be a standalone company, I think the stock gets stuck around in this area. So, I agree with the other guest. I think you're probably just marching time right here. There's probably better areas to put your capital.
Yusuf, does Wall Street understand how to value these companies? I mean, the revenue growth wasn't all that bad, and neither was the bottom line results. When it comes to user growth, we've been so conditioned to look for growing users on Twitter, on Facebook, and now they're starting to clean up some of the mess as a result of some of the social consequences of these social media companies, and Wall Street can't deal with it.
Well, I mean, yes, the numbers for the quarter weren't bad. The problem is you're looking at these companies over the next 3-5 years plus, and so that's how you derive a fair value. If you look at the valuation today, even with this 20% drop, the stock is still trading at 20 times cash flow. Facebook, for instance, is trading at roughly half of that multiple. Google is trading at half that multiple. So I would argue there was a lot of pent-up demand. There's a lot of excitement around Twitter and what they're doing with video, which is good. Unfortunately, I think estimates kind of got ahead of themselves. So, I think valuations are important, particularly in a space where you're looking at the outlook for the next 3 to 5 years. They've done a great job monetizing the platform, but for them to make this into a 5 to 10 year story, they absolutely need to grow users. You cannot out-monetize your users because, they can go to Facebook, they can go to Instagram. There are a lot of other outlets they can go to if you hit them with too much advertising.